following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And I got to commend Jay if he's here with us today. He's not on yet, I don't think. He talked about on the S&Ps yesterday. He talked about this 2067 area being a possible target. Well, that was a target for just a little bit there, as you can see on our 240s. And again, hats off to Jay if he's with us. He is not with us. I'm glad I'm talking about him while he's not here. But as we go into the futures section, just wanted to point out, and this is actually displayed a number of ways. But as we go into the futures section and we go into that 240 top, we see that we've got 2067 there. By definition, we're still in an uptrend, by the way, as you can see on our daily. Even though we sold off a little bit here, guess what? We're right at that critical inflection point area, and we're going to talk about that. So, why is it saying that we're at the top on our long term is because we take on the scanner and on a lot of the automated systems, we are looking at these inflection points as major, change in slope type arrangements. We're also looking at these POCs, these blue lines. 1962 is way down there. But as we look at these inflection points on the top and the bottom of these profiles, unfair highs, I call them a number of different things, but we're looking at a noise level to kind of enact that word top. Okay, and if you see that, that's a function of 10% of the height of that range. Okay, and that the height of the box, the height of the profile, the height of the fair auction, whatever. So you would take 1906 or 2045 in this case minus 1906. And what is that? Let's do the math really quick. To 135 points. So we're talking about 13 and a half, 14 points as the noise level above and below. And we kind of eclipsed that a little bit while ago. We might be bouncing above that area right now. Yeah, we're right at the precipice here. And if I go into my display chart, it's right there. There's the level of the market. And right now, we actually separated our futures on one specific server, and we took our Forex symbols and put them on another one, kind of had them together on the same server, just to give it more clarity and more immediate response. So, yeah, Jay, I hear you. 2067, you called it. Had a little bounce here. Had a good bounce here, about 12, 15 points, I believe, off of that after it hit. So that was a great target situation. And then after that bounce, Jay, just to kind of go back to your Babe Ruth kind of point over the right field fence call. We always want to kind of take a look at when we have these sell-offs, when we have these retracements, we want to take a look at our breadth. So that's kind of the long-term inflection points I just talked about. And as you can see, we just bounced a little bit and we got away from that word top. Okay, because that means we got out of the noise level again. And as we look at the chart, we've actually gotten back above 13, 14 points away from that unfair high. We're trading 2060 right now, real time. These are real-time charts, real-time futures. We pay for all this stuff. And actually, the scanner, the way we basically not get around, but this is completely compliant. Everything in the scanner you see is a real-time derivative. So when you see that level of the market, we're not marking it towards a price or anything, but our profiles kind of give you the landscape there. And every signal, every cell color change, those are real time. We refresh this thing about every 60 seconds. We're getting better and better at processing information on the back end, and we're separating products more and more. We had a guy, well, I just did something here on my screen. Desktop. Let's see. Do we have desktop I can hit? Sorry, guys. There we go. You got to love Windows 8. I hate it. But we had a guy last night. It woke me up, actually. We were in the scanner talking about real-time derivatives. We were in the scanner, and I was, he was looking at what was the custom sort he was looking at. And by the way, let me see if we, on the newest version, which should be out today, I did a pretty lengthy, let me just pull this up so you can see it. Here it is. We did a pretty lengthy explanation grid based on the algorithm itself for these custom sorts, which I know people are going, what defines a breakout? What defines a breakdown? What defines trending, strong trend, downtrend, profit taken, reversals, uptrend support? These are all kind of now put into English, so to speak, and out of the code. So you guys are going to be able to hit a little feature next to the custom sort. So I'm going to go to breakdowns here. And right there, you're going to be able to hit a question mark and kind of get an explanation on what that is. And I'm completely revising these TAS says buttons in the next 24 hours because we've got more information to pull from, which will give that particular section a lot more complete thought process because we've got more in the database now to pull from. So hopefully this thing I won't have to think anymore. So I'll just go in here and black and white. So what happened last night is on the Thai Set 100, and these are guys in Thailand. There's a big brokerage firm out there called DBS Vickers who's adopting this product. Some of the breakdowns he was noticing, he goes, what do these mean? We've got to be able to kind of explain this. So we're doing a translation in a lot of different languages for all the verbiage here, but he was picking out these things. I mean, these particular, the Thai Set 100 was, let me just show you guys. This thing has not been immune. Let me go back to my index grid, which is kind of cool. And, we've got real time on the Hong Kong, on the Nikkei, real time derivatives. We're actually basically now starting to pay for every one of these. We were just kind of focused on the markets that we were getting business from. But as I go into this, and I look at the Thai Set 100, this is one that's just gotten bashed a little bit lately, and the breadths are really, really, I mean, if you can see this is price, and this is one that's just been on a relative strength trading, or relative weakness trading system, just getting his head bashed in, and the middle ground is just completely evaporating here. And how do you use this to, one of the callers the other day, I think it was a guy named Tucker from Florida. I don't know if he's listening right now, but he's like, how do you use this to kind of pick some bottoms? So what I do generally, Tucker, we talked about this a little bit, is, and this guy was trying to figure out, okay, I'm going to still sell breakdowns and try to clip stocks that are, we're in a market that continues to go down. We're getting near the lows, but where do I kind of look at the index as the takeoff point where things might turn? A lot of times, and I've been looking at this for a long time, and we came up with the breadth calculations a little over a year ago. But as you look at this middle ground evaporating, I mean, basically, so let's kind of clear the air a little bit with the unfair highs and with the stocks trading above and stocks trading below line. And let's just look at this. A lot of times you'll get a hint when the middle ground starts evaporating, and that means that stocks are converting. They're converting away from being in a balanced state for the most part. So I want you guys to, if you have this thing, kind of go back and take a look at the relationship. As we look at these things, right now, we don't have a lot of stocks converting yet, and we're classically sitting on the lows back here. And what was this general area? This is August, late August is when we hit the lows on the TISET 100. I'm just giving this for example. You guys can mirror this on the S&P, the thought process. Classical technical analysis, things on their lows go lower. I'm not a big fan. I mean, we're probably going to have a little bit of a bounce here, maybe just sympathy bounce off kind of entering these low areas again, but this will get eclipsed in my opinion. It's a relative weakness index to the globe right now, and any type of downturns any farther in some of the indices like the S&P, the DAX, the FTSEs of the world, are any kind of extra downturns here will just cause this thing to do a flush. And I don't think it's time to start, buying a situation like this yet, even though we've got a pretty good extension. If Tucker's listening, we're kind of coming up into really overextended situations like we had there. Then we had a market turn. But look at this one. I mean, we had a pretty far extension here, and we continued to go down, had a little bit of a bounce there, but this is probably not going to be over here. And as soon as this blue line starts converting some stocks back up into the balanced area, as a little bit of a leading indicator, this is our daily, you're going to have to kind of go back into the 4 hour and the 1 hour to try to start getting some edge first when we start turning around. Because remember, the VIX is probably relatively high on this index, and I just don't think this thing's over. So, all right. All right. So going back to the S&Ps, let's go back to the chart for a second. And obviously our breath's starting to kind of roll over here and do the crossovers. But let's go back to the chart for a second. You got a big support area here at 2045, 2046. That's without question. And as you saw last week, we bounced off that general area, factoring in the noise factor. And that's why we have that 10% top bottom feature in the scanner. We're coming back into it. That's going to be something to contend with. So, how do you trade this? What do you do now? In my opinion, since we've crossed back into the balanced area on a very short term that I look at, I don't look at the 60 too often. I'll pull it up and show you what's going on here. 2067 was a big number. We talked yesterday about the 60 having that feature, the 240 having that feature, and then also that was something we were going to have to contend with as far as the breadth goes. If we got near it and the breadth stayed negative, we're going to have to pay attention to that. But as we look at this now, what do you do now? You got 2045 into 2051 as a support area on this. You've got a 240 on for low and a powerful weekly on for high. But let's talk about that a little bit farther when we come back from break.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Got a 5-minute section here we're going to get into before we go to break. But, I was listening to the guys on TFNN yesterday. I just want to say this. It is so much more insightful to just keep this thing on the background, get all the views. If you're not watching it all day, listen to what's going on. I even whistle the music later at night. Tom, your subliminal messages are working very well. But as opposed to watching, you can get extremely way off track, in my opinion, watching CNBC. I've done it in the old, long time ago. It's a lot of times, usually after the fact, it gets people in trouble. You hear all this fundamental news behind me over here on the TV, and it just, in my opinion, the technicals are the way to go. Everything's baked into the price. This is what the market is saying, that the bids and the offers are middle ground. And, Basil, Steve Rhodes, David White, I love listening to him. Larry Pesavento, the whole 9 yards. If I've forgotten somebody, Daryl Martin. Who else? Andy Hecht. Just incredibly good information. And those guys are very well prepared for the show every morning, and they're giving you things that, these guys are reading the news wires, and these are insightful professional opinions in my opinion. So just stay the course, as George Sr. would say. We're looking at the S&Ps here, and we're trying to figure out, what do we do now? Kind of in a little bit of a no man's land situation here right now. I think you've got a chance, as long as the breadth stays relatively negative on the short terms, you've got a chance to sell that 2067 on any rallies. Remember, that was support. Remember, in classical technical analysis, you kind of like sometimes support just converts to resistance, right? As soon as it's broken, and I hope we get a rally back up into 67. That will be a chance to pick a battle. But right now, it's you don't have a lot of leverage here. You've kind of sold off if you're just waking up and you're like, oh God, I got to get some trades off. Sit back, relax. Successful trading is supposed to be boring. You're supposed to wait until you have the leverage, and hopefully we can provide some edge here. So you've got some big time support now at 2045, and that's been the case. You're going to have a little bit of noise factor there. It's a big long-term inflection point, and remember, those are going to have a little bit more play around it. And you've got a short-term area you can start, playing around with on the short side around 2067. But I'm going to keep my eye on this, and I'm going to see what's going on here, especially with the 60. For day traders, this is a pretty good little scene to stay in tune with. And again, it looks like there's some stocks converting here, and we don't have them all open. This is incorporating pre-market information now, and actually before we were reliant on eSignal's weekly and daily information to really start changing these cells. Now we're doing it on our own 60-second refresh, so you'll be able to see changes in the weekly and daily cells as they happen on individual stocks, because pre-market now we're actually, and hopefully the breadth will give you a little bit of lead time even before the market opens. And remember, the breadth's calculated based on information from the internals, and you've also got the major inflection points sitting right here on those time frames. So if I want to kind of figure out my S&P levels, if you guys are trading S&Ps or looking at the market in general for some guidance situation to trade underlyings, you go across the grid here and you've got these long-term inflection points on the weekly sitting right here. There's that 2045. Here's that 2067 that Jay pointed out yesterday, top there. And, just really kind of allows me to use this as a, what's the thing that pilots sit in? Cockpit? Cockfighting's a big deal in the Philippines, by the way, talking about the word cock. It's they have it on TV. You can actually watch cockfighting on TV. It's a sport. Don't know how animal rights people feel about that, but just throwing it out there. All right, so let's move on. I want to hit the euro next, because this thing's obviously done a moonshot here, and is it going to continue to go farther north? My opinion, no. That's my opinion. Here's the bottom of our profile. I got stopped out of this trade trying to catch it as it was coming back up into on that announcement. Maybe it's going to stop at 106, 67, 68. That wasn't the case. That was a pretty serious underestimate of what was going to happen with the ETB announcement. So now we're dealing with this. We're going to talk about the euro a little bit farther when we come back from break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new Yield Pledge money market account with funds from another financial institution, or deposit new funds into an existing Yield Pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Let's take a look at our Forex section here. And we're going to talk about the euro. And here's that EUR. Where are we at? I'm getting older and I can't see as well. There is the bottom 6 there. Okay, so what does that mean? That means that last breakdown on the profiles on the long term, we're 6 weeks into it, but we've rallied back up into that unfair low that we talked about. Was really, really important. And I'm mousing over and it's saying basically 108.99. Let's just call that 109. And we had 4 days up past that previous profile, and we've been lurching up here without question. But let's look at this thing. Now, if I'm looking at this and I'm looking at our daily and I'm like, hey, this is classical. Okay, we punctured completely the daily downtrend that was going on, and now we're kind of consolidating here in this little classic pennant flag type little deal. But you know what? And that's concerning, but I'm still going to stand by that 109 is going to be something to leverage off of. I don't like the way this thing's kind of pressuring up into it here. And you know what? This is what stops are for. But I'm still going to look at this euro situation as everybody's jumping on the bandwagon. It was we're going to par, blah, blah, blah. We had to run some people out of town on the short side, and we may get back up into 113.52. That's completely possible, but I'm going to try to pick a battle here and give myself some room, and hopefully this thing will start falling apart again. That's the take on the euro. Let's go into beans here, because this is something we talked about the other day, and I know John from Philadelphia is probably all over this. We talked about, in fact, I was talking to Tom, and we were kind of, just talking about a small fundamental piece of news. My friends at the elevators, it's rained so much in the southeast part of the United States, and this is not the grain belt by any means, but we talked about fundamentally on a very small scale damage to the crops. We talked about that over 8%, which is mold and just all kinds of things that are going wrong with the soybean crop, and how that gets really parabolically worse price-wise or demand-wise for the elevators as that damage goes past 8%, and that's actually higher than 8% is the norm around here in the southeast. And the rain levels in the southeast are off the charts more than normal average rainfall for this year. I'm talking, I think North Carolina alone is like 15 inches above average. So the farmers can't get in the field, and when they can get in the field, they're getting, and that has not a lot to do with global Brazil crops and things like that. But as soon as we took a breakage above here and consolidated above on our daily, it was time to sit still and wait for another area to sell. And we talked about that. And that area to sell we talked about was 907.5, 908. We actually reached 909, and then we've come off pretty hard. So again, waiting patiently, like we just talked about on the S&Ps, for big time leverage areas to be hit. And I'm just showing you guys on the chart here what happened here. And then the scanner, if you set your usual suspects that you like to follow into a list, a portfolio list, and just you can have them on your radar screen over here on the side, and just it'll tell you. It won't alert you and make a sound. We're working on that right now, but it'll let you know when ripe opportunities are happening, when inflection points are being approached. You don't have to have these charts that I have with the indicators on them, but just letting you know about that. Okay, John from Philadelphia. Thank you. So, what do you do with soybeans now? So, our targets were reached. We got a new profile that appeared today, a big wide one. We're back into getting into that. I think the trade's kind of happened right now. I think we could kind of roll over and continue to visit lower prices. I don't see a lot of things to lean off of here on the short side. Here's a 240. Obviously, getting confirmation, breaking that 240 unfair low here, which is also in the scanners. I go into beans. I'm going to pull this up. I'm going to give you a final thought on this in just a second here. We've actually got them categorized properly now. So I'm going to go into beans, and I'm going to see that, we broken below that 894 area. This is kind of our red situation here. There's our long-term 21 weeks. We've had 9 days in an uptrend. We've got a new profile that's appearing. We're within it now. But that's probably going to be the retracement area to hit. If you're looking for something to sell, 894. I don't think we're going to get back into that area. But as we look at the 240, anytime we get any rallies back up into there, I think you can try something there. And then obviously that 907 area up there would be something to try to pick a battle again. But right now I'm just, if you got some shorts on, don't see any reasons to really take them off, but not excited about initiating new positions. And when we see a new 240 profile attempting to appear, that'll be a little bit of a signal for whatever you got left on there. And that'll be shown in the scanner as a little yellow thing appearing on the edge of this red, which is just like that. And if I go into, let's just go into profit taking down here. And I'm going to take out my S&P 500, and I'm going to put in my futures section, or I could put in a custom list. These are the profit-taking situations right now, wheat and corn, actually, on the daily on corn and wheat. So it picks out weekly and daily yellow peelbacks happening, and obviously we don't see any bean trades on there in the long term. So, all right. So I'm going to get rid of that, and I'm going to go back there. I'm going to go back to my dashboard. All right, so let's see here. Silver. Let's hit silver really quick. And we're going to go back to our March silver. We're going to take a look at gold too. Let's take a look at gold first. I always like to start out with gold. So we've gotten close. We kind of retraced a couple of days ago back up into that after the sell-off, back up into that 1087, 1090 general area. And why is that such a big deal? Because that was our unfurled, our daily and weekly. So we've hit that. We've come off. I think we rallied last week up into 1088. So that was in the wheelhouse of waiting patiently to gold's in a downtrend. We're looking for resistance areas by definition. You've got some support now at 1060 on a new profile this week. You're going to have to pay attention to that one. So for guys who are wanting to get long, you got a little bit of support at 1060. You're gonna have to place stops there, but I'm not a big fan of going long gold right now. So that's the way I'm looking at gold. I'm waiting for it to break down below 1060 to sell. That's what I'm looking for. So let's take a look at silver. And again, this is the scanner's trying to give you a roadmap on. Again, it's hard to sit. Said again a lot. It's hard to sit in front of these screens and do nothing. I'm aware of that. And you know what? To be honest with you, I'm going to tell you something. This is very true. I'll throw $100 in a Nadex account and just use it if I have to sit there and do something. Boom, small little things, blah blah blah. But my main account, I'm waiting patiently, and less trading. Again, it's been proven over time. Your broker's not going to want to hear this. Actually is a better way to go. So just food for thought. Okay, so silver, you've got resistance now at 1426.27. As you can see, we came up and hit those targets yesterday actually and just reversed very hard off of them. 1465. Did we hit it to the tick? Let's see here. 1464. Okay. 1465 was unfair highs. And again, you're trying there, it doesn't work. You're trying again there because silver is just even weaker than gold on a relative weakness scale. And as we look at this, we wait patiently. We pick our battle on the battle lines. There they are. And that's what happened yesterday. So what do you do now? You've got resistance again at 1426.27. You've got a breakdown happening again. And in my opinion, gold and silver can head lower. Jay, you got to keep your day job. Okay. Anyway. Let's take a look at the Treasury situation. You got some resistance here at 126.23.24. I think you got to wait on that. Right now we're trading 126.17. That's a wait and see. That's a wait job. 126.23.24 on the 10-year. We talked about soybeans. I just want to hit corn really quick. This is March corn. Got resistance at 377 now a bushel on March corn. We've come down into some, breakout again, former resistance, now support here. But I think the bigger number, since we have a new profile this week on March corn, is going to be that number right there. And I'm just visually showing you this on the charts, but I can go into my futures section. I can go into corn, and I love this thing. There's that big 377 area, and you see a yellow peel back on the daily. That means a new profile is going to appear here, more than likely tomorrow, and that's going to be more overhanging supply. So I'm still a big fan of shorting corn. 377 stops above. Okay. Wheat, man, didn't think I'd ever see wheat below $5 a bushel constantly. I mean, this is, I was talking to my my uncle on Thanksgiving. I don't know if I mentioned this before, but my family's just, everybody I know is in either processing grain or pulling it out of the field. My uncle, who's been doing this forever, along with my brother-in-law, My brother-in-law farms about 1,000 acres in his corn, wheat, soybeans. My friends are at the elevator doing the drying, sending it to Cargill, what have you. But my uncle, I was talking to my uncle, I was like, what do you hope? Because he does about 800 acres himself, and he leases a lot of land. And I was talking to him, I was like, what do you expect to pull as far as profit goes this year per acre of corn? And I mean, he's always shaking his head. I mean, it's the end of the world all the time, because you got a $250,000 combine you got to make payments on. And, you know, when the crude oil prices went up, and grain prices were going sky high a couple of years ago, you know, the fertilizer charge goes up. It seems like when they go up, they never come back down. So right now, he expects, all things considered, on an acre of corn, and this is actually without even any weather problems or anything like that going on, which are going on. I was like, what do you expect to make per acre, generally speaking, on corn right now? Like, you thinking $200 an acre, all things considered? He goes, are you out of your mind? I'm lucky right now if I get $75 an acre. And that's after fertilizer, crude oil, or excuse me, fuel, the whole 9 yards, and leasing the land. And I was like, how in the world? I know how much trouble it is to farm. $65, $75 an acre. I'll pick the top number. I mean, I was just completely floored. Yeah, it's amazing. And when I was growing up, there was tobacco allotments. They kind of got rid of all that in North Carolina, and it's kind of a free for all now when it comes to raising tobacco. But you could make $3,500 an acre off of tobacco when there was tobacco allotments, and there was only a certain amount of those acreage in North Carolina, and that's why everybody wanted to grow tobacco back then. You could make $150, $200 an acre off corn back then, and $3,500 an acre off tobacco. And I'm still, in a sense, attached to it. All right, so let's take a look at the XLF. We got about 45 seconds left. The XLF, okay. So here's the long-term picture. Obviously, we talked about this, that this was kind of the relative strength trade, the banks and the widening spreads. And now with, the market selling off, and the concept that they definitely are going to raise rates, and maybe this might not be the only one. It'll be as they don't want to freak anybody out. It'll be a scheduled process. The banks with the sell-off in the market are still kind of hanging in there, and I'm not a big fan of shorting this. And any breakouts above 24.77 on the XLF are going to have to be bought here. They're going to love that widening spread in the yield curve, and that's what you see in the bank prices right now. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Dollar, let's take a look at that really quick. Then we're going to hit the Aussie. This is a dollar situation. Obviously, we came off that big number up top, 128.29 or 27.28. I can't see. 28.29. I actually left some on there. I thought we were going to do a ramp up. I took some off at this major inflection point from that 96 general area. Got stopped out of that as we had traversed and just completely impaled ourselves on this long trade below 98.79. So right now, as you can see, a little bit of resistance there on the daily, but I'm kind of focusing on the more important number, which is 97.89 here, and just looking at this as like a collection area. If we can get back above that daily and furlough, I'm just kind of getting back on the long wagon. I mean, there's no free lunch in this thing. That was a wicked pullback, obviously, with the ECB news. I don't have to tell you that, but we always talk about, before these big announcements, trading the reaction and not getting involved with the action, and definitely not throwing the dice before these things. I think 30 basis points, 20 to 30 basis points was factored into that. So, are they going to raise it? Are they going to do a 40-point? That was kind of, I was in London when this was happening, and there was 300 guys intensely giving really good commentary on this and what the downside was. And, anything obviously below that, as far as help to the euro, was going to be something that was going to cause some reaction like this in the dollar and the euro, obviously. I think this was a little bit more of a overreaction on the dollar. I mean, the euro is 30-some% of the dollar, and then when you have when you have an announcement like that, and some of these things get overdone. I think the dollar's a little bit overdone inversely relative to that euro. But you've got support here at 97.89, 97.90, and I'm going to look at that as a buying opportunity. This profile is ratcheted up higher. So that's the way I'm looking at the dollar. Still a buy around 97.89. And we're obviously having a little bit of a lid here for that thing to possibly come down and meet that price. So that's kind of a wait and see also. Let's take a look at the Aussie. Okay. Well, I've been pretty bullish on this, getting past closing. If you watch this show, weekly close above, go back and retest. My targets weren't reached, and that sucks. Above 74.39, 74.40. I actually left some on. This was something I got scalped on below, getting back below this 72.61 area, 62 area. But we're coming back into that weekly unfair low, daily unfair low here. This is going to be a little bit of a collection area. I'm going to go to the scanner really quick, and I'm going to pull up the Forex. And where's it at? There it is. As you can see, we're sitting on that inflection point. We're getting close again to this one. It's not hit yet, but that's where we're at, sitting around that profile. This is going to update in a second. This currency is moving pretty quick, but we're right there at these inflection points again. I'm willing to take a shot on the long side again on this, on the Aussie dollar. All right, you guys got to stay tuned. Larry's next. It's been good to be back this week, and you guys have a good day trading.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.